Thinking about incorporating your business because someone told you corporations pay less tax? Stop before you incorporate. A corporation can be a powerful business and tax planning tool, but incorporation does not automatically mean you'll personally pay less tax. And for some business owners, incorporating too early can add cost and complexity without delivering the benefits they expected. Hi, I'm Us Melbourne, founder of Melbourne Accounting Solutions. One of the questions Canadian entrepreneurs ask me most often is, Everald, should I incorporate my business? My answer isn't automatically yes. The better question is, does incorporation make sense for your business, your income, and your long-term goals? Let's break it down. Imagine two self-employed business owners. Both earn good incomes. The first owner needs almost every dollar the business generates to pay personal living expenses. The second owner earns considerably more than they need personally and can leave some profits inside the business for future needs. They both hear, incorporate and you'll save taxes, so they both incorporate, but their situations are completely different. That's the problem with one-size-fits-all tax advice. A strategy that's valuable for one business owner may provide far less benefit to another. A corporation is generally a separate legal entity from its shareholders. That creates opportunities but also responsibilities. Depending on the circumstances, incorporation may offer advantages, such as tax deferral opportunities. A qualifying Canadian-controlled private corporation may benefit from the small business deduction on eligible active business income, subject to applicable rules and limits. But here's the important part. If you immediately withdraw the corporation's earnings personally, the overall tax advantage may be very different from what you expected. Limited liability. Incorporation may provide shareholders with some protection from certain business liabilities, but that protection isn't absolute. Personal guarantees, director liabilities, professional obligations, and other circumstances can still create personal exposure. Income and compensation planning. A corporation can provide flexibility in determining how and when owners are compensated, subject to tax and corporate law requirements. Succession and business sale planning. For qualifying shares, incorporation can also become relevant to future succession planning and potentially the lifetime capital gains exemption. But qualification requires specific conditions. You don't simply incorporate today and automatically qualify tomorrow. Now let's talk about the cost. Incorporation also brings additional responsibilities. You may need a separate corporate tax return, corporate bookkeeping and financial records, annual corporate filings, payroll administration if salary is paid, GST, HST compliance where applicable, proper documentation of dividends and shareholder transactions, separate corporate banking, additional accounting and legal support. So the question isn't simply, can incorporation reduce taxes? The real question is, do the benefits justify the additional cost and complexity for my situation? Don't incorporate because your friend did. Incorporate because the numbers, risks, and future goals say you should. Your business structure should be a strategy, not a trend. There isn't one magic income level where every Canadian business owner should incorporate. But it's worth reviewing when your business is consistently profitable. You're able to leave some money inside the business. Your personal tax rate is becoming significant. You're hiring employees or taking on greater business risks. You're planning major growth. You're considering bringing in shareholders, or you're beginning to think about eventually selling or transferring the business. Those circumstances don't automatically mean incorporation is right. They mean it's time to run the numbers. At Melbourne Accounting Solutions, we don't believe business owners should incorporate based on something they heard online. We believe the decision should start with your numbers. We can look at your business income, personal cash requirements, tax position, growth plans, and long-term objectives, and help you understand the financial and tax implications of your options. And where legal advice is required, your accountant and lawyer should work together. If your business is growing and you're wondering whether it's time to incorporate. Let's have the conversation before you make the decision, because choosing the right business structure today can influence your taxes, cash flow, risk, and future opportunities for years to come. Before incorporating, ask yourself, what specific problem am I expecting incorporation to solve? Lower current taxes, tax deferral, liability concerns, business growth, succession, selling the company one day? If you can't clearly answer that question, don't incorporate simply because someone told you that you should. Get the advice first. I'm Us Melbourne, founder of Melbourne Accounting Solutions. Our mission is simple: to help Canadian business owners make smarter financial decisions, reduce unnecessary taxes, and build stronger businesses. If you found this lesson valuable, please subscribe to our channel so you never miss future Canadian business, tax, accounting, and financial insights designed to help you succeed. And if you're wondering whether incorporation makes financial sense for your business, contact Melbourne Accounting Solutions. Let's review the numbers and help you make an informed decision before you restructure your business, helping Canadian business owners learn, grow, prosper. Thanks for watching, and I'll see you in the next lesson.